US President Trump is not doing very well in the polling at the moment, guys. What does that mean for markets? So, guys, I've written in more detail about this below, so do check out the text of the blog. But basically, to sum up, Trump is not doing well in the polls. He's really slipped since the start of this coronavirus pandemic. A lot of voters must be feeling like he's failed to contain the pandemic, which, I mean, given this second wave that's going on, you have to say is probably true. But the point is, there's this FT calculator, really good. It takes all of the latest polling and it predicts if people vote how they are currently polling. It predicts Biden is going to win by quite a big margin. He's going to get those 280 seats, likely to get much more than that, whereas Trump is going to be quite some way off winning the presidency. So what does this mean for markets? Well, the first thing you've got to consider before you consider the outcome of the election is how does Trump behave in the build-up to November? Because potentially, if the polling doesn't get any better, you might see him getting a bit more desperate, you would say. So you might see the president trying to play to his strengths. Now, what are his strengths? Well, Trump polls well when it comes to trade policy, because Americans are protectionist. And also on stuff like his policy towards China, because Americans don't trust China, especially since this coronavirus pandemic, which came from China. They do not trust China. So we would likely to see Trump pump up this rhetoric against the EU and China on trade, just general anti-China message in general, because that will really play to the sensibilities of voters, and it might help him out because, he can frame it as if Biden, his main rival, is weak on these issues, which could really help him out. And you've seen him play this kind of thing in the past against Hillary Clinton and he ended up winning. So never count out Trump. The other thing, obviously, when it actually comes to election night, how is the market going to react? Well, I mean, we don't know. We're not going to know until the time, really. Expectations ahead of this election are still evolving and still shaping, so it's way too early to say definitively for sure how the market's going to react. But the general thinking is that Trump has been a dollar positive president because he likes protectionism, which is bad for global growth, and he likes fiscal stimulus in the US, which is good for US growth. That combination is USD positive, I should say. Biden, but obviously for that reason, would be seen as USD negative. However, Biden's also seen as a negative for risk assets, especially stocks, because he's got, higher tax policies, which stock investors don't like. That could hit risk FX as well, though, because of the correlation, which could lead to some kind of bid for the dollar. That is the thinking at the moment, generally, but we're going to have to see. It's going to be really interesting over the next couple of months, guys. Really important theme to be following. That is pretty much it from me for now, and I'll see you in